What's up, guys? Dave Uziel here, back at the Planet Spot. Appreciate you checking this out. I want to introduce my really, really good friend who is a familiar face now on the second time. Hey, Robin, how are you, sir?
Hey, I'm good. Good to be here, Dave.
Thanks again, Robin. I want to also introduce Jewel and Janina, who are ASL interpreters. If you guys don't remember, Robin is deaf, and he communicates through ASL. And Jewel, do you mind just talking a little bit about why there's two interpreters?
Hi, Dave. Sure. We have a 1 hour podcast. So Janina and I are working as a team. Our approach today will be to split the work. So for the first 15 minutes, you'll hear my voice express Robin's thoughts. And Janina is using the sign language to communicate to Robin anything that you're saying. And then after about 15 minutes, we'll switch and you'll hear Janina's voice and I will be signing what you say.
Awesome. Well, thank you both for being here with Robin. Robin, let's get into the nitty gritty. So I want to first talk a little bit about my relationship with Robin. As most know, that we are members of a powerlifting gym/team called PowerWOD through our coach, Jesse Burdick. That's how we met, I think probably 4 or 5 years ago, something like that. And
that's right.
Over time, we've gotten to get to know each other on different levels. And obviously, we did the podcast about ASL and the difficulties with it in the community. But one thing that a lot of people don't know, or maybe they do know, I don't know, that Robin is very, very good with the stock market. I didn't really know much about it or anything about trade options and stuff like that, futures. And so Robin offered to kind of teach me, along with kind of mentoring me on how to look at stock markets and maybe have that as another financial income for myself. And during these times, a lot of people are trying to figure out, how do I make money with what I have? And so again, let's get into the nitty gritty. Robin, how about you tell us a little bit about your background when it comes to stocks?
Sure. Well, it started with my grandparents who were trading bonds and shares. So I saw them doing that. I was a young person. But when I started I got heavily involved after I sold Convo, a company that I founded. I didn't have much to do, so I thought I'd go ahead and check out the stock market. So I'll give you the timeline. I started off as a swing trader, and I thought it was easy. It seemed pretty simple. I saw a lot of people. I wondered why a lot of people didn't do it. But then I moved into day trading. And that's when I started really getting beat up in the market. And I learned a lot. I paid teachers to learn day trading, and then I went back as a swing trader, and then I started making money again. So I work with clients. Well, I had one deaf person come to me saying they were struggling with the market. They had a hard time understanding it. So I got on video with that person and taught them in ASL. And it helped this person, as a deaf person, understand the market. Of course, English is not my first language. And while I can read, online articles and everything, I may struggle a little bit with the English. And this friend of mine was struggling even more. And once I explained it in ASL, that I started helping more people and working with more people. And then Jesse brought in a few hearing people into the picture. So most of my group is deaf. And I learned to teach them how to use the market. And now I have a group who follows me.
That's awesome. Thanks, Robin. So Robin, can you talk about what swing trading is?
Sure. My definition of swing trading is really from, point A to point B. And this is based on big levels, not on small levels. So it may be easier for the public to understand, if I say I try to hold a trade for a few weeks. Okay. Sometimes it may be a day or two, but typically it's a few weeks. And sometimes our trade is really a day or less. And it's a day or less, and it's not based on my plan. We have a entry point and an exit point, and we get to the exit point quicker than we had anticipated. Like for now, right now, the markets are incredibly hot and may continue to be hot through fall. So I expect the point A to B will be faster than a few weeks. So we may be trading within a day, 2, or maybe 3.
Got it. So do you want to, if you don't mind, Robin, can you go into what options are?
Sure. If I want to buy a share of ABC, company ABC at a certain price, say $55, I will hold the option to buy those shares. But for some reason, things change. Say I have Apple stock and it looks super good. The price is going higher and higher and higher, but I get nervous. Is it going to continue to go up? I may buy a put, which means I expect the price to go down. So the put is actually a hedge play. So if the price does go down, I'll profit because I put a put on there, and then I'll buy more shares. That's hedging my bet. Now now the public can trade options. And most people are unidirectional. They expect the price to go from A to B, increasing. There's no intention to buy shares. No intention to hedge their bets. So most option players they're called Robinhood traders.
Awesome. What about futures?
Well, futures are my favorite.
I know.
So futures is called derivatives, are called derivatives. So that's where big money comes in, hedge funds and so on. The CME, Chicago Mercantile Exchange, they're trying to make these shares more available to the public, these futures more available, so that you lock a price in from now for a few months. And the reason you do this, back in 1910, 1920, I'm not exactly sure when, but cotton farmers, produced their cotton, and then they went to Chicago to the Mercantile Exchange, and they were offered a low price. And the farmers are saying, if I knew you were going to offer me such a low price, I wouldn't have produced so much. So they talked to the market exchange, and they decided to set up what's called future contracts. And this means those they agree upon a price, they set it, and that price is good for a few months. And this is for commodities, only commodities. But at that time, it was only commodities. And then they started adding metals, oils, bonds, and indexes. Does that make sense so far?
Yes.
Okay, so now why do I like futures? It's often times 100 in terms of leverage.
Okay.
So if you buy an oil contract at $45, for example, it should move to $45.50. That's a 50-cent increase, right? But if you use futures, you get a $500 profit. That's at 50 cents times 100.
Oh, got it. Okay.
So you got to check it out. Seriously. My favorite is NASDAQ or the SP 500. Now the NASDAQ, moves about 100 points. So the value there could be a $2,000 profit when it moves at 100. So professional traders usually focus on futures. The small money or people who are new to trading may stick with options. But I do encourage those who are trading options to start moving to futures because they have what's called a micro future. Instead of 100 times, it's only times 10.
Okay.
10 leverage, and you can learn there. So futures are my favorite place to be. I want to add one more thing, Dave. If things become volatile like they had back in February and March, I will move back to options to reduce my leverage. But once things calm down, I'm going to move back to futures.
So do you find, because you do follow with me and we work together on our, my account or whatever you want to, with Robinhood, we're always talking about what's the best next options. So do you recommend that now that I've been doing options for about, I think since December, profited really well with Tesla? That was kind of a crazy.
I think it started in September, I think.
He started in September, right? And it just happened that we had a big situation last fall, right?
I do remember. And it was one of those things that it really got me really in tune with it and really excited about what the potential was. Obviously, nobody saw, COVID coming. So we all backed off a little bit. And then suddenly, look at Tesla with their over $1,500 now. Which could have been, a good future maybe, or even a good option play watching it grow so fast, but getting in was
actually, no, just to clarify, you can't trade Tesla through the futures market, but you can do it through the options market or by shares.
Okay.
Futures is very limited in what you can do. So you can trade indexes only, or bonds, metals, or different commodities. You cannot trade shares, however, in futures.
Got it.
But let's talk about your story really quick. What did you feel like made your trading successful?
I think for me was, first was you explaining things kind of in detail for me. Obviously, we texted a lot and I was able to get that information, especially understanding how every day you kind of have to watch how, the fib line and everything that you're learning. I'm still not 100% understanding of the fib and that stuff. But I do understand watching things move in a certain direction. We do a lot with the QQQ. We do a lot with, Costco and Cisco and these kind of things. And I'm trying to understand your thought process.
That's not very successful though.
No, it's been a little bit bad.
Right.
But I do believe that, with great growth, you got to take some back. And, it's I don't know. I call it options trading like gambling. You really are gambling, and I've never, ever gambled in my life.
Oh, for sure. It's definitely like gambling, but you're right. But it's kind of like an educated sort of gambling, right? You're trying to kind of figure out what is a good play, it's not a good play. You're trying to list all of your evidence to kind of support that decision. And you say, okay, this has a 75% chance of winning. So to me, that's an educated gambling guess. Right.
And it's interesting we talk about that. So for some of you guys don't know, the market on the West Coast opens at 6:30 a.m. And I remember I was told
6:30, that's right.
by Jesse and Robin to be awake at 6:29 to be able to know what's going to happen, because that's when Robin is going to tell us what to do for the day. But I want to know, Robin, do you look at the market reports before opening, or do you look at what's closing, or do you both? Because I know you send us the reports every day. But where are you getting the understanding of what the future, or what you look at, and how do you determine what play you want to do?
Good question. So I'm going to go ahead. So I usually have a checklist, and my checklist typically is sort of a mental checklist. And I wanted to kind of write that out on paper, and I haven't done that yet. But let me explain what my mental checklist looked like. The first thing is to look at the smart and dumb ratio. That's the first thing I look at, the first thing that's most important to check out. The next thing I do is the NAMO. That's the name of the indicator. So for example, you kind of want to feel the wave of the market to see where it's at. And then the next thing I do after I check out that wave is I look at what's called the Erst Cycle. And so that's a 90-day cycle, and then a 45-day cycle, and then a 10-day cycle. So you're able to kind of analyze all of those different timelines. After that, I look at the Vix Fear Index, VIX Fear Index. And then after that, I look at the bonds as well.
Okay.
And then I look at some individual leaders to kind of see where they're at. And then I can kind of weigh my decisions, the potentials, what's not going to be successful. Now, with all of those checklists and items on my checklist, then I kind of pay to get some more information. I buy certain things to get information. I'll buy one stat. It has a list of different trading histories. So for example, if you purchased X share on August 8th and you sold it on August 10th, what is the history? What's the stat of that?
Okay.
Right? So typically I like to get that information to kind of inform my decisions. And I will get that information and match it with that checklist, that mental checklist that I went through. If everything looks good, I go for it. And that's something I use often for futures and indexes as well, and options. So my weakness, though, is the individual stocks. I still haven't really mastered that. That's why my trading often is kind of less in frequency.
Mm-hmm.
So that's where I need to grow still.
Yeah. So I wrote down your list so I can write it back to you if you want it. So, and I'll send you a text message with it.
Yes.
So let's start with the top one. So the first one you said was the smart and dumb ratio. Can you go into detail a little bit what that is?
Absolutely. So smart and dumb, I don't know. I really don't like that terminology. I feel like it's more appropriate to say rich and small money.
Got it.
Okay. Now, smart or rich, however you want to call it. The reason why this is important is because they have enough cash to kind of push the market forward. Let me give you an example of that. There's a famous trader back in 1993. It was a man named George Soros, and S-O-R-E-S, and he put in $2 billion in short. So he was expecting that price to drop because of that. So we had plenty of cash to kind of create that. And so in the UK, they also had cash and they knew that information. So they were waiting, and the UK started purchasing that to keep the price up because they didn't want that price to drop. So what they did is they started buying and adding to that short because they knew that he had more cash than the UK. So it ended up that the UK ran out of cash during that process, and the short kicked in. The price dropped. And I think he made almost, I don't know, I think it was 200 or 300 million in one day. So that's what we would call a movement market. So I try to look at that and see where that is, and I follow that. I try not to figure out the logic. I don't try to figure out the news. I don't try to find the reason behind the way things are going. I just follow that. Now, you and I, we are dumb money. We are what makes up the dumb money.
Hey, listen, I've been told that a lot worse before, so don't worry about that. The next thing on your list was something you said, the NAMO.
Yes, NAMO. That's kind of like the wavelength, if you will. Anytime it hits the bottom and it's minus 60 or minus 90, it's always a good time to buy. Anytime it hits positive 60 to positive 90, it's a great time to perhaps sit on the sideline.
Got it. Can we talk about the Erst Cycle?
Yeah, the Hearst Cycle, right. So that's basically a tool that I've started to use, I think probably in the last couple years. If you notice from the big picture, you can see candles that typically will show sort of patterns, right? If you start to kind of analyze a specific part of that timeline, you're going to find numbers of days in which that pattern repeats. So for example, February 19th this year, that was the start of one cycle. And 45 days after that, you started to see a breakout.
Okay.
And let's talk a little bit more about the 90-day cycle. So February 19th, the crash started, right?
Mm-hmm.
And so 90 days after that, that was June 29th. Now the next 90-day cycle will probably end, I believe, in August, September sometime. I'll have to look at the exact date. But the next one will be on election day. Okay. So you have to keep that in mind, those patterns. And so if you have investments, you have to plan according to that Hearst cycle. Now, do we know what's going to happen? Can we expect certain things? We can't, but we can say that it should be a big market move day. Which will it? I don't know, but we can assume that.
Do we assume that because election day, you're going to see it go up or down, or is there a pattern that we've seen every 4 years when it comes to that?
When it gets close to, well, yeah, there is a pattern. Yeah, let me explain what I mean by that. When we get close to that day, we should have more information that we can then predict. The number one thing that I will think about is I want to look at the bonds and see where they're going in their pattern. Because if the bonds start to go higher, that's telling us that the US needs money to support the economy. And then that means that the revenue for companies is going to drop a little bit. So that bonds is a really key indicator. That's the number one indicator that I like to look at. And bonds for the last 6 months has just been flat. It's neither gone up nor down. And that worries me. And it worries me. Will it worry me tomorrow about what I'm going to do? No, but it worries me for about what I'm going to do in 3 or 4 months from now. So it's more of a long-term impact. Now the Vix Fear Index, that's VIX Fear Index.
Yeah.
We look at for positive divergence. Now, if the price is pretty flat and I'm looking and seeing the divergence kind of coming up and there's purchases happening, I would say that this is more likely that I want to buy puts.
Okay.
Now, I was thinking of suggesting to our group to buy out of money puts. And what I mean is, like, for example, the QQQ is at 258. I was thinking that there might be a trend line of 170, the price of 170. And so I want to buy out of money puts at 170. So if it's cheap, let's buy, 10 or 15 and then leave it. If it's 20% chance of a crash, we would profit from that.
Got it.
But we can still buy some calls because we have this as a hedge. So there's just one idea that I've been kind of mulling over in my head. And I typically like to ask other traders for their opinion on this topic as well.
Interesting. When it comes to, you were talking about bonds a little bit, if we can kind of just jump in, because this is a lot of stuff I don't understand. So let's talk about bonds and what that means so people could understand that.
Sure. So bonds are pretty simple. People buy bonds as a way to loan money to the U.S. government. And the U.S. government can then use that those funds to push for their economic policy or do other things with it. But there are also a secondary purpose for bonds. Back in the day, bonds had a 50% interest rate. I'm sorry, a 5% interest rate, not a 50%, 5%. And so rich people typically would kind of look at that and say, well, I expect a return from the stock market this year, and maybe it's a 3% return, maybe it's 4%, but the bonds at 5% are really attractive. So rich people kind of moved over to that bond arena, so because they had better returns on their investments. But right now, bonds are pretty low. I think right now they're 0.7, 0.8%, 0.07%. I'm sorry. So that's kind of lost its attraction for the rich. They can't really invest in that and expect to have a large return. But it's still safe, right? Still stable, because if the indexes kind of become parabolic and it goes up, it will come crashing down. It could crash 30 to 40%, but bonds still have a better return when they have a crash. It has 0.07% return. So it's interesting.
Yeah, that's really interesting to me. So let's talk a little bit more about options, because that's something I'm doing a lot with. So recently we've been talking about leveraging, being smarter about leveraging, because the market is so volatile right now.
Mm-hmm.
So, when it comes to somebody who's brand new, that's kind of what I wanted to talk about, is for somebody who's new, what would be your first piece of advice for them?
Let's see. Well, I should say that, I remember that I was a new trader way back when. So I asked a person to say, just invest less than 5 or 10% of what you have. Now, sometimes it depends on how much cash a person has. So say you have $1 million. Are you going to use 5 or 10% of that? No, of course not. So I would recommend 1% or 2.5%. But if you only have $1,000, then go ahead, use 5 to 10%. So that's one tip that we discussed. Another way I like to answer that question is, if you plan to trade, are you going to sleep well tonight? If the person says, yeah, I'll sleep fine, then you're using the right amount of leverage.
Mm-hmm.
If you're waking up all night and you keep checking your phone all night long, you're over leveraged.
Got it. I think that's really good advice, because I remember when we first started, I asked you, okay, this is how much I had in the bank. We first did, I think the first thing I did was buy 10 shares of Tesla at $300 and something. And I didn't really, I think it was like $316 or $17. And I remember saying to myself, okay, like what am I going to get out of this one? Because, Tesla was so up and down, kind of with Elon making his comments and acting a certain way. But then, we then started doing options. And so my goal was to just take, I think I started off with $5,000 plus what I spent for Tesla. And saw the change really quick. I saw the returns really quick. And yes, we got lucky with Tesla on some of the options. And I remember you starting that trend for me, saying, hey, for the group, and saying, okay, let's go with a little bit of Tesla here as options. And then I started to see that, understand these kind of cycles that Tesla was going through. And I remember dumping in, I think we bought 10 options for 3 weeks later. And that's when I started to understand day trading, because things are so volatile and quick that I remember going to Jesse, and I would tell Jesse, okay, I'm going to buy this. And then within maybe 2-3 hours, it was such a big jump that I saw myself making $17,000, $18,000. And, call me Jewish or whatever you want, I didn't want to lose that money. So, Robin, you understand that.
Yeah. That type of trade, that can happen once in 10 years. That kind of leverage with a return, that doesn't happen often, once in every 10 years. So now that you have that huge profit, take it and put it somewhere else in another account.
Yep.
Because you will assume that that's going to happen again or repeatedly. People think, oh, I'll set up my income goals for weekly or monthly based on that event, and that is not going to happen. I'd like to talk a little bit about Tesla. Tesla was a huge opportunity. And what they did was they built their base. And they built that for over 3 years. And that's the longer the base is, once it goes up or goes over, the longer it will go. If you have a short base, then it'll go up a short way. The longer base, the higher it'll go. So I trade. So let's see, you joined in September. I traded a year before, and I was patient for a year with those shares. I mean, I can't even tell you. My traders were starting to tell me, that's a sucky trade. And I kept saying, wait. And what I saw was that big money was buying Tesla, but small traders kept shorting Tesla.
Got it.
So when it started to break out, 2 things would happen. The first is small money would start buying, and small money would have to buy to cover their loss. So that's a double whammy.
Right. Yeah, I do remember. Sorry. Go ahead, Robin.
Yeah, well, that's why I don't feel super solid with options, but I felt good with shares in that situation, because shares don't have a limited timeline. Options in this situation, the timeline is limited. Tesla's great. Now, the reason you had that huge profit, but I didn't in that situation, and the reason is I went through a big day where I lost a lot of money because of, I don't know, arrogance. So you get this fear inside that you feel like you're holding back. You got lucky because you ignored the, ignorance is bliss. You had that, no big deal. And that's great. I'm thrilled for you.
Yeah. And it's funny because when we had that first wave, I think it was like right before Christmas. I think the first wave of, it might've been after January. I'm not 100% sure, but we had that first wave and I made all that money and I said, okay, I'm going to test the waters. And I did it again and did it again. And it was working. And then I did it the 4th time and it bit me in the ass. And that's when I realized, oh God, I'm not really understanding how this all works. So I stopped. And I remember I texted you and I said, okay, what do I do with this? And you said, move your money out of Robinhood. So you stop playing with that money. So I moved it to my savings account, which is still sitting in, and it's great.
Good. I'm glad.
But I definitely got my ass handed to me.
You know, I do believe there's one more parabolic move left in the fall. But I'm not sure which individual stocks to invest in. Tesla, you know, there's DocU, which is one of my worst trades. Mm-hmm. And remember, we all bought like something in the 80s, right? And we sold at 100, and then the second sell was at 120, and look where it is now. It's almost at 200. So that is one of our worst trades. So, you know, I'll look for another one. I do think that there's one more parabolic move, and then we really need to reduce our leverage before November.
Right. And I think that's what I'm starting to feel within myself. And as I was looking through my Robinhood and some of the stocks that I have, and you know, I know that I understand that the stock market is very volatile right now, even though it's moving up in a lot of ways, but there's a lot of things that are really stagnant, and we're not seeing much movement, and it's causing, and even if it's, you know, $20 loss or something like that, I'm looking at as we get closer and closer to November, we're going to start to see, I think, because of just what the world is like right now, that a bigger dip will hit us. And then depending on really who becomes president, I think then it will start to change, because I can speak for myself. The last 4 years prior to this year, our company has never done so well. And I believe that our economy was the strongest it ever was. And we saw that in a lot of little, especially small businesses. I'm not really sure like the large businesses, because I don't really follow that. But what I'm seeing now is the small businesses aren't doing so well. And the large businesses like Tesla and these other companies, you're seeing their stocks take, I mean, we're talking not even 3 months ago, Tesla was like $360. And now I think they broke 1,500, right? I think they're sitting somewhere around 1,500.
Right. You know, that is the key. That is a great discussion point. There is no connection between the economy and the stock market. No connection. The stock market is driven by bets, educated guesses, and that's called speculation, right? It has no tie to the economy. While it's good to watch the economy, and you know, I don't look at their past and future performances, but I do like to look at futures when I look at and I speculate things for the futures. Disney, for example, let's speculate. What if we find a vaccine in a year or two from now? Will Disney still be good to buy? Maybe, but we have to have a lot of patience. Boeing airline is another example. There are other airlines, Southwest, that it has potential in the future. But, you know, do I want to see their profit loss or their balance sheet? No, and it has no impact on the price or the activity.
And that's an interesting conversation, because I always thought that economy and stocks kind of work hand in hand, but guess not. Are you seeing? Go ahead.
I'll send you an Instagram post from a CNBC commenter who is also a hedge fund manager. And this person's message, they're saying this is an example of big money driving the markets for a profit.
Got it. So the rich right now are really playing with the market, because they really don't have anything else to do.
Exactly. Well, you know, and also, you know, where else are they going to make their money, right?
Right. Right. That's a really interesting point, and I think that a lot of this information you gave today was pretty awesome. I mean, I still have a lot to learn, and so I'm really excited to see what the future holds. I think that you know, obviously we're all kind of sitting and wondering what's next, and I think doing trade in a responsible way with somebody like you who really do guide in a very what's the right word? It's almost like you are playing with our money. You're acting our money as yours, so you're not wanting to lose, and so you were making leverage plays, and you're always telling us, you know, be careful, don't push, you know. And we obviously have had some weird times in the last couple months, and they've been discouraging for some of us, but we also realize that, you know, that there's a trend. You're going to win some, you're going to lose some. And so the last question I have for you, Robin, and I've been thinking about this a long time when I also got involved, is, you know, we talk about, or we're talking right now about the economy, and, you know, people are not losing, you know, not making money, either they're on unemployment, you know, their job. Do you believe that this trading is for everyone? That is kind of, and what you call, what we've agreed that it's dumb money.
Yeah, I'll give you an example. I have one guy who lives in Italy, and their business was closed, just like here in America. And they first reached out to me and said, hey, I want you to come up with different ways to make me around $80,000 in the markets in the next year. And so I told him, you know, with the amount of leverage that he had, that he could do that. That was potential. But he may not see anything for 3 months. And then in the next 3 months, he might see 30 to 40,000, but maybe nothing the next 3 months, right? So people in general typically think that, you know, hey, I want to look at a daily or weekly or monthly income. And my answer is, this is not the way to do that. You need to look at the cycles. You need to look at the yearly income. Now, if people say, oh, but I need money soon, I say, you know what? This market is not for you. Markets aren't going to wait for you. Markets are going to decide when to go, when they want to.
Got it.
And so you got to ride it out or not. So I still strongly recommend for anyone who wants to trade in the market to have many, many different sources of income to help along that process. And that's why when I say trading, you need to research different services. I trade and I research different services. I have a business on the side. I own the interpreting agency. So I have lots of different forms of income. So in case one of those, you know, perhaps has a 3-month dry period, that's okay. I'm okay. You know, I have all of these other different cycles that I'm dealing with in my income revenue. So that's my advice, I guess.
So if somebody wants to work with you, because I've sent a couple people your way, and everybody's been successful, and, you know, there are goods and bads. But what's the best way to get a hold of you?
Right. So you can email me. You can post my email address. It's robinhorwitz@me.com. That's ROBINHORWITZ@me.com. And I will let you know that I have never advertised my services. All of my clients are word of mouth, and I really like it that way, because word of mouth, I think, allows me to have a good relationship with my clients. They appreciate my services. And when it comes to advertising my services, I think there's a certain disconnect that you have with clients that you gain in that way.
I agree. And I think that's the one thing that is good about word of mouth. And that's how my business grew the way it did, was all word of mouth. The last thing I'll just state is that, you know, obviously Robin being deaf, a lot of the communication is through text messaging, email, but he's really utilized a cool tool called Slack.
Or Slack, yeah, exactly.
Slack has been, we use it in our company. And when he sent me the message saying, oh, we use Slack, it is a great way for all of us to communicate. There's a chat room where people could talk about their thoughts, or you just follow what Robin says in the, with option alerts and future alerts and stock alerts, depending on what level of service you want to help you with. So what I'll do is I'll post your contact information, mainly your email address, and have them reach out to you and then let them know that you got recommended by me, because that's always a good thing. So again, Robin, I love you.
Thank you.
You're such a good man, and you've not only this, but everything you do with the ASL community. I think you should be really proud of it. And both Jewel and Janina, thank you so much for being here with me and helping us out. And it's been a fun day. So that's it. Any last words, Robin?
Nope, we're good. Stay safe, everyone. Stay healthy and have fun.
Thanks, guys. Don't forget to wear your mask, like Jewel just said.
Right.
So.
And don't forget to wear your mask. That's right.
All right. Bye, guys. You have a wonderful day. Thank you so much.
Bye.